So, morning all. How are we? Hangovers? I drank a lot of beer yesterday. Did anyone drink a lot of beer? You're all looking wine. Okay, good. So I'm not the only alcoholic in the room then. So what else are we feeling this morning? Bitcoin price? Ethereum price? It's looking good, isn't it? I asked the question yesterday, and I'm going to ask it again. Who owns Bitcoin? Who sold Bitcoin recently? Ooh. That's not good. That's not good. It's a hold. It's a long-term hold. So we're going to have a bit of fun now, and we're going to do some stuff. If you saw yesterday, one or two of these slides may be repeated, but we'll kick off and volume, please. There you go. So, Bingeable. So why did I invest in Bingeable, and why are we supporting the Bingeable project? And why did I take them to Dubai 3 weeks ago to meet loads of investors and family offices? Okay, so we're going to dig into that now. There's a game changer here, and the ICO market already is changing. So we'll touch on that in a second. So I'm what is known as a cypherpunk. Okay, not a cyberpunk, but a cypherpunk. What does that mean? It means I believe fundamentally that cryptography will deliver better choices and better outcomes for mankind. Okay, so look up a guy called David L. Charm. Okay, that's where the foundation of the cypherpunk movement came from, but also it's the backbone of the early people in Bitcoin, crypto cash, digital currencies. It's something that is worth having a dig into because you'll really understand the ethos behind what we're trying to do here. So, we'll have a quick look at ICO market. We'll have a quick look at the ICO trends for 2018, and there's some fundamental structural changes in this industry. And then we'll play with some other stuff. I tend to do things randomly. There you go. If you squeeze a small state, if you squeeze a nation, it will find a way and a different path. North Korea, one of the biggest emerging miners on the planet, can't feed their people, but they make a lot of Bitcoin. Cheap hydroelectric energy. So if you look at the small states, Malta, Gibraltar, Isle of Man, Liechtenstein, haven't really revealed their position yet. The small states are embracing crypto because it delivers an opportunity to get inward investment. It's good for business. And North Korea, there you go, he's shaking hands with the South Korea leader. Let's see how long that lasts. But anyway, it gives us hope. It's good news. And I just couldn't help laughing. That's one of my favorite pictures of the year. The book is rubbish, by the way. Yeah, the book is really bad. 75. What does the number 75 mean? Have a guess. Come on, somebody have a guess. You're not going to play with me, are you? Well, that's a good answer. Number of currencies is now over 2,000, actually, cryptocurrencies. 75 is actually the number of ICOs that fail to meet their soft cap. There's a lot of people out there trying to raise capital. A lot of the people have got projects, and for one reason or another, they don't raise their soft cap. Lots of reasons. They rush too quickly, the proposition doesn't work, they're badly organized, and they make lots of different mistakes, which we can touch on. Okay. Cryptonomics, tokenomics. Often used in the same sentence, mean completely different things. So I'll offer this to you, just as a bit of reference. Cryptonomics is about the network, it's about the infrastructure, it's about the underlying consensus. Tokenomics is around how to program a store of value that can be changed, swapped, bought and sold between one or more parties. Very different things. So if you hear a so-called ICO or blockchain expert, ask them the question, because if they don't know the difference, they don't know what they're talking about. And there's a lot of scams out there from the advisory point of view, bear in mind. A lot of people say I'm an advisor, but they've never actually done anything. So 95 is a good one. What does 95? Have a go. Well, sort of, yeah, it could be, but actually it's more fundamental than that. What have you got in your wallet? Which currency? Euro? Okay, dollars. Okay, let's look at the dollar. 95 is the value of the dollar has declined 95% in the last 75 years. Keynesian economics, quantitative easing doesn't work. Keynesian economics is predicated on the fundamentals that if you want to stop an economy going into deep recession, then you print loads of cash and you pump capital into a market. Doesn't work. The value of your assets, the value of your pension fund, the value of your property. I mean, my parents in the 50s bought a house for £300. That same house now is £1 million. That's a demonstration of the devaluation of currency created by the criminal central banks. They are criminals. Jamie Dimon is a bigger one. Okay? So, guys like me really believe that we have to change things. So, let's go over a few things, okay? Pensions, failed product, don't work. They deliver for government employees, but for an individual, you will need a huge amount in your pension pot to draw €1,000 a month. Roughly about 400,000 you'd need in your pot. Over 30 years, these robber pension companies will take 40% of your pot, your savings, in fees and charges. Mortgages. You have a 25, 30-year mortgage, you will pay for your house 2.3 times. Failed product. They're cheating you, they're robbing you. Insurance. Ponzi scheme. You need money coming in the top. They need to sign new clients to pay out the old. Ponzi scheme. Venture capital. Ponzi scheme. Okay? We're being screwed, we're being turned over by institutions, and this technology gives us a different choice, a different path. Fractional reserve banking is the system that we currently have today. Doesn't work. Central banks, never been audited. We don't know the inner workings of what they do. They control money supply. But more importantly, who owns them? Anyone ideas? Who owns central banks? Who owns the Fed, for example? Do you know? Who? Shysters, did you say? Yeah, well, look, it is. I mean, it's a scam. Ownership actually is for the Fed, it's actually backdoor investment banks. So they create money, it goes on the balance sheets of the banks, and all of a sudden, they get a dividend out of that. The Fed shared 80 billion in profits to their stakeholders last year. It's a scam, people. It's a scam. And I do get followed. Normally a black sedan. So, let's move on. So, I showed this yesterday, and a lot of people were interested. This is a replacement capital market happening to replace the broken system that we have today. And boy, oh boy, is the system broken. Millennials really have an opportunity here to pick up the baton and do something, to create a new set of products based on a new technology platform, which are fair, transparent, they work, they actually deliver on their promises. So this ICO market, this new capital market, which we're all here, the Chainges conference here, is part of this new revolution. So Ethereum was the first one, really. I bought Ethereum at $8. Anyone buy it lower than that? What did you buy it at? $3. $10. Well, that's not lower than 8, is it? God. Here we go, the DAO. The DAO is still very controversial. It worked really well, but a backdoor was left open on a smart contract. And here we go. 2017, second half, boom. Capital markets. This is new capital markets happening as we speak. And there's lots there that we all know and you may have invested in. How many of them will be here in another couple of years' time? Who knows? But anyway, it's evidence that new capital markets is predicated on a simple fact. The criminal banks are not lending money. And if they do, they make you pay for it. The cost of capital is ridiculous. They're raping us. You might as well just bend over now. So, 2018, the momentum is continuing. We have 6.6. So I got this off CoinSchedule yesterday morning. So it's into May. 3.2 last year. It's continuing now. Huge. Where will it be next year? 20, 30 billion? More? Who knows? But the shift is this. Okay? 85% of money raised in ICOs at the moment is not coming from the crowd. They're all coming from institutional investors. It's a big problem if you're trying to raise money from the crowd because you're going after a smaller piece of the pie. There are hundreds of ICO projects appearing all of the time. And on our platform, on our Chain Starter platform, I get 30 deals a day offered to me. So there's enormous competition, airtime, for a smaller piece of the pie, which is why I spend most of my time now dealing with institutional investors, family offices, and we take our children, our projects, Bingeable and some of the others, we take them directly into the family offices. So how do we get the institutional investors excited? How do we get them involved and engaged? It's a different game, people. It's not what you think it is. So look, I write a lot of stuff out there. There's some examples. I have some very controversial views and thoughts, and I really don't care whether you agree or don't agree. Okay? They're there. What we have to do as a community is, previous speaker, young man there doing his due diligence stuff, we have to create a set of standards ourselves. We have to police this market, we have to do a better job, and we have to give the institutions, the people with the real money. The crowd don't have the money. When I was in Dubai at the beginning of March, there was $8.6 trillion in the room. Huge. But a very small percentage of them are looking at crypto. Okay, and then there's two differentiators here. The institutions will invest in blockchain projects. They see it as a fundamental play in a good underlying technology. What scares the pants out of them is crypto. Crypto they see as volatile. Crypto they see as, bit of a punt. So if you're trying to dress your project up, okay, and you want to get institutions excited, bury the technology in the message. You do not have to lead with a token. You do not have to say, buy one of our tokens. What you have to lead with is a clear articulation of the problem, the proposition, and why blockchain and how blockchain works. Okay? And the quality of the deliverables has to be really decent now. Sovereign wealth funds are unlikely to invest unless you have a big social impact project. Okay, so we're very heavily into renewable ones at the moment. Sovereign wealth funds are having a look. Smart cities, of course, again, another big social impact which these institutions are quite keen on. Am I doing the right time, Simon? So, crypto investing at scale. The way I look at it is we are investors ourselves. My business partner, Dimitri, and I, we invest in a lot of projects and a lot of businesses. So when we look at an investment opportunity, we tend to think about the lens in which, what would be good for us? Why would we invest in this project? And we'll touch on those in a second. But in terms of the very simple things, one of my sons here, Obi's here, and he probably reads, 5 or 10 white papers a week. And 90% of them are rubbish. Complete dog shit. Okay? Not because the idea is bad, but it's because the way it's been articulated and how you package it up. The game has changed. The crowd, who is naive by and large, the crowd very rarely read a white paper. They'll buy on a speculation or on a network, and they'll go on Telegram and say, there's 20,000 people on Telegram, I must have one of these. Telegram is not a good indicator of the number of investors. Airdrops, you can rig them. How many genuine investors on social media? Very few. The crowd is not a good representation of who's going to buy into your project. Game has changed. So, we'll talk about tokenomics, because that's the secret sauce. There was a lot of confusion yesterday. I heard a lot of speakers get up talking about their token, and when I asked the question, as an investor, what do I get when I buy one of your tokens? I got bleh. Nonsense. Okay? So, it's up to us, really, to have a clear understanding of what you're buying into and ask the hard questions. Okay? You can call it whatever you like, due diligence or whatever, but do not believe what's written in a white paper. And interestingly, I broke the Tezos story. I spoke to the lawyer in California, and those people will go to prison. Both ex-Morgan Stanley bankers. There you go. Engineered to be deceitful. Tezos. What happened with Tezos? Okay? They declared a utility token, but it was actually a security. In the white paper, they made misleading statements about the performance of the project, what they were going to deliver, how they were going to deliver it, how many people they were going to hire, the roadmap for software development. They missed them all. And the SEC went after them. So, engineering this game, it's a great way of raising capital, but to get institutions in, we really have to raise our standards. Really. So, forget the white paper. If you want to talk to institutions, you need to think of two documents. The first is an investment memorandum. If you don't know what they look like, look it up on the internet. There's loads of great examples out there. They tend to be a much shorter, punchier document where you have a very simple and clear articulation of what you're looking to raise, what you're going to do with the money, what is the problem you're solving, what level of investor confidence you're going to have, what are you offering them, very clearly, very short. The most important factor is you have to have projected financials that have been looked at and in a sense signed off by somebody. Investment memorandum. The attraction of going for a private placement is very simply this. You can avoid all regulation. As an owner of a business, you are entitled to look for capital privately. Big, big message, and that's why the majority of the capital now is being raised in a private placement. To a certain extent, providing you're not misleading an audience, you're taking a lot of the regulatory complexity out of the picture. However, if you are issuing a security token, and you know my views on that from yesterday, I would never buy a utility token because they're worthless, and nor would an investor. Okay, it's going to be traded on an exchange, big deal. But investors are looking for security. They're looking for something that they can put on their balance sheet as a yield-bearing instrument. Okay? They might buy a handful of tokens, but you're looking for 10, 20, 30 million. You need to offer something substantial. Investment memorandums. If you're issuing a token that's a security in Europe, you have to fulfill the prospectus regime. Different game entirely. So if you ever read an initial public offering document, you know, like a NASDAQ offering for one of the big ones, look at an IPO document. Very detailed, 100 grand to produce, because you have to pay Deloitte or Ernst & Young to sign it off. You have to have various people approve the underlying information in there. Prospectus is good, it's healthy, it's a good approach, and if you create a prospectus, you will improve your opportunity to get institutional investors in the game. But it's not for the faint-hearted. It takes 6 months to do a good one, and it's expensive. So, what do we look for? So these are some of the projects up here. So we're a big social impact. So there's a couple of rules of investing that I always use. Okay? I'm looking for projects that will get to 50 million users quickly. Okay? There's a couple of guys in the room here that have a sports app. Do we think there's a potential to get to 50 million users with a sports app? Absolutely. Huge market. Fetchcoin is one of our investments. Dog owners. There's 1 billion on the planet, 160 million in America. Do we think you can get to 50 million users? Yeah. Sweatcoin is another one of ours. They've already hit 14 million users with no marketing. So you download the free app, you walk to the pub, you earn Sweatcoins. You can spend the Sweatcoins, because it is a utility token, you can spend them on the platform with discount goods, Nike products, or what have you. Will it scale to 100 million? Probably. Can we find a blockchain fast enough to run it on? No. Which is another thing. Okay? Anyone who says you can build a 5 or 10 million community and set it on a blockchain, they're mad, they're smoking weed, they've lived in Amsterdam too long. You know? It's impossible. Blockchain technology is in version 1. If it was an opera, it's Act 1, Scene 2. It's early days. This technology is not so good. Very buggy. Doesn't scale too well. But it has huge potential. And you can engineer it in certain ways where it does deliver what you need. But if you need 20, 30, 40 million people sitting on a blockchain with all those transactions, we need to rethink it. So carbon footprint is a big thing. You know, the millennial generation embrace change. They want change because governments lie to us. You know, they put out all this fake data about how they're really doing stuff when they're actually doing nothing at all. So have a look at living offset. It's a carbon offset. So a cup of coffee. How many cups of coffee you had today? 1. 250 grams of carbon. Your coffee. Paper cup. Grinding the beans. Warming the coffee, the milk. Disposing of your cup afterwards. So, you know, offset is a big deal. So the project has enormous potential to reach loads of people who are disenfranchised and think that government's not doing enough. Bingeable, you've already seen that. It's a direct-to-fan model. We're not going through Netflix, who will rape you. You put content on Netflix, you sign your content away in blood, you never see it again, you never have a control of it. They don't give you any data on who's viewed your content. So, Snoop Dogg's got a new movie. You saw a little clip at the end. Idris Elba's in it, so it's quite a cool combination. Snoop's a big crypto investor, by the way. He's a very cool guy. Makes a lot of drugs. But the thing is about that, it's a direct-to-fan model, and that's what we want, don't we? We want to consume cheap content, and we want to get it from the fans, from the creators direct. No platform in the middle. So ponder that one, huge. And then, of course, Vireo. Vireo is a green energy fund based in Singapore, and it's a ramp into green investing. So if you love green projects, hydroelectric dams, solar, wind, it's a platform to get involved in buying your little bit of saving the planet. Huge. So our criteria is social impact at scale. Can the project scale? How many users can we get to quickly? If Binge will get to 20 million users, they will be bigger than Netflix. They've already got 300 million fans in their network. And every time you add a new famous person, like a Tom Cruise, you're adding another 100 million fans. So think about engineering your proposition around reach, around reaching people. The sports guys, some famous names will help you drive enormous reach and touch. Okay, association with some of the bigger brands will again get you reach and touch. Anyway, there we have it. So, do we have time for a few questions, Simon? I don't bite, unless you ask me a ridiculously silly question. Right, I'm around. We have a stand here. Thanks for listening. See you later.
Thank you very much. Good job.